Hey guys, good afternoon. This is Tony Thompson with NAMMBA. First and foremost, we're going to do welcome to today's webinar, Game Changing Financing Programs. As we're getting everyone on board, want to have you, if someone can just send a quick button through the chat function that you can hear and see my screen, or raise your hand, that will be great. Again, if anyone can just send me a quick email through the chat that you can hear or see my hand. Looks like we just got one. Great, raise the hand. Thank you very much. We appreciate that. Oops. Okay. Well, first and foremost, I apologize for coming on a little late. I always like to raise my hands. You would think of a year of COVID, we all could do technology and all these webinars with our eyes closed and our hands and feet tied behind our backs. But every once in a while, I still have technical difficulties trying to get this thing put together. So I want to apologize for coming on a little late, but we are excited about today's webinar. And so guys, first and foremost, for those who are out there in Facebook, we are also Facebook Live. So welcome to today's NAMMBA Success webinar. Shout out to all of our NAMMBA Facebook followers. You're going to love today's webinar, which is titled Game Changing Finance Programs. And so as we get started, I want to first introduce and thank Trio for being a bronze sponsor of NAMMBA, as well as being and conducting today's webinar. As a reminder, guys, we are counting down the days to NAMMBA's 5th Connect Conference live in the ATL. Right now, you've got an opportunity to get your tickets for $195. That includes access to our gala, but dig this, in celebration of our 5th anniversary, if you purchase your ticket before July 1st or July 31st, you will be scheduled to be able to be in the drawing where one of 5 lucky people will be eligible to win $5,000 in cash the first day of the conference as a part of our 5th anniversary celebration. So come to the ATL. We're going to have great partners like Trio. We've got over 60 exhibitors, and we've got some really great special announcements of some keynote speakers that are coming up. And here's the deal. You need to know what's going on in our industry. That's what we're going to do, is bring that to you in one place. 2.5 days of training, connecting, and really looking at best practices to help you grow your business. Speaking of helping you to grow your business, that's what we're going to talk about today. I would like to introduce Aaron Tuttle, who is the Director of Business Development for Trio. He will be moderating the session today. And then Jonathan Grafflin, who's with Essex Mortgage. Jonathan is over the correspondent channel for Essex. And well, I apologize for not having his photo here. His photo is live in person, so that's even better for that as well. So having said that, I would like to introduce Aaron Tuttle with Trio, and Aaron's going to lead today's session.
Thanks so much, Tony. And John, sorry about the picture. Well, you can see his pretty mug right there in the corner there. So, and he'll be
better or worse. It's okay. I have a face for radio, as they say.
There we go.
There you go. So, Tony, is it okay? I'm going to go ahead and do you mind giving me permission to go ahead and share my screen here real quick?
Absolutely.
Okay.
Andreas, can we please pull that down?
I think he's done it. So here, let me go ahead and do this. All right, so I'm sharing my screen right now. I just want to make sure folks that are watching can go ahead and see this before I just start moving along too fast right here. If you could write in the chat section, you can see it, that'd be great. I'll just wait here just a second. Unless Tony and John, you guys can see it, let me know.
We do.
Can see
you
it.
You do? Oh, perfect. Okay, so I like to always kind of start off with just a quick little, not a quiz, but just a quick little poll, and just kind of ask you some general questions. And if you answered yes to any of these, and especially if you answered yes to all of them, then you're definitely in the right place. So I'm just going to quickly kind of start this off, and just not starting with something negative, but I want to make sure if you've ever lost a deal and the different reasons why you may have lost a deal, right? So have you ever lost a deal because of a late stage credit denial? Unfortunately, this seems to be kind of a popular one, especially during COVID, with things kind of popping in late stage surprises that we don't like to see, right? We always want to make sure that we have an option for those customers down the road. Well, Trio and Link are going to be great options for that. Have you ever lost a deal because of no income seasoning? Well, if that's the case, well, then definitely you're in the right place. Have you ever lost a deal because of no down payment assistance? Sometimes people make too much, right? But they've got a low credit score. But what do you do with those folks right there? Well, this is going to be a great option for you. Have you ever lost a deal because of the customer being self-employed or 1099, one of those non-traditional incomes, like maybe a gig worker, a musician, something like that, right? Well, this could be a great option right there. And then finally, have you ever lost a deal because the customer had a credit score lower than 620? Well, like I said, if you answered yes to any of those, you're definitely in the right place. So we've got some questions here for you. What if a mortgage product existed that expanded access to credit but didn't increase the risk, right? One of the reasons why we're not offering any of these sort of things is because we don't want to increase that risk. But with Trio and with Link, you're now going to be able to have that option. What if lenders could originate mortgages today for customers that aren't yet qualified, but will be qualified in the next 2 to 3 years? Well, that would definitely expand your customer base, right? And that would give you a lot more options right there. What if customers that are self-employed, have a 1099 income, have a non-traditional income, had access to 100% financing down to a 580 credit score, and with one of our products down to a 550 credit score? Wouldn't that be nice? And then finally, what if originators had access to home financing products with guaranteed approval, not subject to late stage underwriting surprises? Well, we'd all like that. Well, we've got these two products here that I want to introduce to you. There's Trio and there's Link Loan, which is brand new. So just a quick background on Trio. Well, actually, I'll get into that in just a second. But here, let me just kind of quickly kind of go over the differences between these two, and then we'll break them down for you. I'll go ahead and talk about Trio. John's going to go ahead and talk about Link. Together, we're working together to find one goal to help customers become homeowners, right? And to help you go ahead and originate more loans for customers. So for Trio, Trio is our customer facing product. It is a lease to own product that's up to 5 years, and it bridges nearly qualified customers into home ownership. This is our flagship product. It's been around for 20 years now. It has an 85% success rate of helping customers become homeowners. And we'll get into that in just a little bit. And then our brand new product that we are just launching, and this is the first time that we've actually talked about it, our brand new product, Link Loan. It is an industry-facing product. So it's a traditional loan providing a long-term mortgage term loan, creating a new way for lenders to safely originate affordable loans for customers that may otherwise be denied. So keep talking about the customers. I want to make sure before I get too far into this, let's address who this can go ahead and work for, okay? And the reason why I want to do that is because I want to make sure you guys realize there's a lot of folks out there that could absolutely use these products right here, okay? And so as I'm listing out all the different professions, all the different people that this could use, please, I invite you to make a list for yourself of different folks that you may want to reach out to, that you maybe have in your current pipeline, maybe folks that you had in your pipeline in the last 3 to 6 months that you want to reach out to and say, hey, guess what? I think I've got an option for you. So let's start with the cute couple up there in the top corner. These are first-time home buyers. You're probably saying, well, I work with first-time home buyers all the time. I can tell you with a product like Trio and with Link, you're probably not addressing all their needs. And what I mean by that is, according to HUD, and we are partnered with HUD with Trio, 68 million Americans can only use a product like Trio or Link. That's 25 20 to 25% of the American population that can only use one sort of product, right? And it's because that they might be, they might have a low credit score. They don't have enough DPA. They don't have enough down payment assistance saved up. There's a lot of different variables, right? It might be because of their job. But whatever the case is, you might only be working with 75% of the population right now. We want to make sure that you can work with 100% of the population, which is why we're talking about this right now. All right, next we have the two folks that are doing the high five up there in the corner. These are small business owners, entrepreneurs, 1099 contract workers, gig workers, right? Uh, Take a look at these job descriptions that we see quite often with our company. We see hairstylists, we see personal trainers, we see barbers, we see massage therapists. We have Lyft, Uber, and truck drivers. We have musicians, we have performing artists. We even have real estate agents. Many of our first customers, they trust the product enough for themselves and for their customers. And this is also an interesting one. We have a lot of lawyers, we have a lot of doctors, we have a lot of CPAs that own their own practices, right? They're small business owners too, right? But they make too much to earn any sort of down payment assistance. This might be a great program for them. Next, we have the gentleman who's extremely excited to be getting his student loans here in the next 6 months. This is somebody who's a recent college graduate, right? This is a young professional without any sort of down payment assistance. Traditionally, you're going to need 2 years of financial history or income to go ahead and help a customer like this. But with a program like Trio, you don't need that, right? You don't need that at all. So it opens the door for a lot more of that population to go ahead and speak to and start helping them out. And then finally, we have the cute family down there. These are folks that are going through a major transition. Okay. They could be going relocation, right? This has obviously been very popular in the last year, relocation, because of people being able to work remotely now, right? So that could be something. It could be because of a new job, right? That's also really a red flag for lenders. It unfortunately could be because of divorce or loss of a loved one, right? It could also be maybe a transition like, hey, we want a second home, we want a vacation home. That's also a pretty big situation right there, right? And all those are options with these programs. So let's quickly kind of go into what is Trio. Well, Trio, like I said before, it's a HUD approved lease to own home ownership program. Before we can operate in any state, we're always obviously approved at the federal level with HUD, but we also are getting partnerships with state and local housing agencies to go ahead and bring the program to that particular region. And like it says here, we were created to bridge that gap between renting and owning. Most customers feel like they only have one option, right? They can either get a mortgage loan and become a homeowner, or they can rent, but there's actually a lot of in between, right? And this is where a program like Trio and a program like Link can absolutely come in and save the day and help everybody out. So how is Trio different? You've probably heard of other lease to own programs before. How is Trio different? Well, we're different in many, many ways. Okay, first of all, because we are using an FHA loan, that's right, we are the only company in the country allowed to use an FHA loan. We are actually purchasing that home using an FHA loan. Lenders can originate that FHA loan for Trio. So that's super important to talk about right there, right? That means that you can absolutely get involved, and this is another option for you down the road. For customers, this means that customer can assume that FHA loan, and that's always nice to hear, right? It gives them a nice option and a great stepping stone in the future. And it also means that pretty much every dollar spent that they've put into that property for any sort of rent or anything like that, well, guess what? It's actually going towards the P&I and the purchase of that property down the road. And something else that makes Trio absolutely different. Customers actually earn equity while they're leasing, right? That's pretty kind of unheard of right there, but it's a great way for them to go ahead and get down payment assistance. So here's a quick overview of the TRIO program. First of all, it's HUD approved, like we mentioned before. It is a 3-year lease to own program, but we can extend that up to 5 years depending on the customer situation. It's a free customer application. So just from the get-go, it's absolutely free. It doesn't cost them anything to just apply and see, does this work for me or not, right? So if you have any sort of marginal customers, let's try it out. Let's see if it works, right? If so, you have something that they can absolutely fall back on. One thing that's very important and that makes us different from everybody else, the customer gets to choose the home of their choice. They can buy new or they can buy old homes, right? That's always a nice option. And we're not delegated to certain school zones, certain neighborhoods, or anything like that. When we say the state of Texas, we mean the entire state of Texas, okay? Agents and lenders can participate. Agents earn their commission. Lenders are going to be originating loans with TRIO. Fantastic to hear. Like I mentioned before, TRIO purchases using an FHA loan. We're the only company in the country that's allowed to go ahead and do that. Our success program, all our customers go through 2 years of financial coaching and credit repair while they're in the program. We love to make sure that our customers are succeeding in the program, getting the right numbers to get to that next step, right? That final step, which is obviously home ownership. Our home care program, all our customers enjoy a home warranty on the home, on all the appliances to make sure that that home is safe and efficient for that customer throughout that lease process. Our home purchase assistance. This is making sure that our customers are enjoying and have a home that is actually affordable in the future, right? What does this mean? Well, the home purchase assistance means that that option price for the customer when they're fully ready to transition into home ownership is going to be as low as 1% over cost. So take, for example, a $300,000 home. That means in 2 to 3 years when that customer is ready to buy that property, well, it's only going to be $303,000, only 1% over that. As we know, home prices are appreciating quite a bit nowadays, right? But with this, that's not a problem at all because it's keeping that locked in for them. I know this is definitely a difference between us and any other competitive programs out there. Almost like a 14% difference in some cases. So that's a pretty steep difference right there. And finally, TRIO's down payment assistance program, that equity that home is appreciating throughout that process, well, that's actually good for the customer. We can gift that to the customer so they can use that towards the down payment and closing costs when that customer is ready to go ahead and buy that property. So let me go ahead and show you real quick. Just some simple math. Obviously, I'm not using compound interest or anything like that. I just want to keep this as simple as possible. But the original purchase price, this is what TRIO paid for that home, saying it's $300,000. Okay. The new home value, just saying maybe at the end of 3 years, it's appreciated $30,000, right? $10,000 each year, right? Well, that customer option price, though, they're not paying that $330. They're actually paying the $303, which is awesome, right? It makes it much easier for them to go ahead and qualify and afford that. In addition, that gifted equity, we take the 330 minus the 303, you get $27,000 in gifted equity that customer can now use towards down payment and closing costs when they're ready to buy. And I know someone's probably frantically typing this in the chat section right now. I can tell you this gifted equity can be used on top of any other DPA programs out there. So that's pretty fantastic to know. So like I said before, we have an over 80% conversion rate. This number is actually 85% of our customers fully convert into home ownership and become homeowners through TRIO's program. There was a news report that was done yesterday actually on this, and they said it correctly. This is 85%, right? Well, that's actually 82% higher than any of our competition out there in terms of their conversion rate and helping customers actually become homeowners. So it gives you a big difference right there. And kind of, I think a really important one, especially for NAMMBA, 80% of our customers are from unrepresented populations, right? 80% are from essentially non-white populations. This was essentially one of the goals that we had, and we're obviously achieving this to make sure that we're helping everybody out, helping everybody become a homeowner through TRIO's program. So real quick, we talked about Trio. Just go back to that real quick, right? Two products, one goal. Trio. It's a lease financing agreement originated by Trio, providing up to 5 years to transition from renting into owning. Lenders can originate an assumable FHA-1 mortgage, and the DPA is actually provided by Trio. Now, John, I'm going to hand it on over to you right now, if that's all right. And then just tell me, I'll go ahead and flip the slides for you, if that's okay.
Great. Thank you, Aaron.
All right. Here you go.
Wonderful. Well, thank you, everybody. As Tony and Aaron indicated, my name is John Grafflin. I run the correspondent business for Essex Mortgage. Essex Mortgage is a full-scale correspondent lender headquartered in Orange County, California, but we are national in footprint, and so we cover all the states eligible with Link and Trio. Very excited to be here. I've spent almost my entire career in the correspondent side of the mortgage business, about 22 years now, and it's great to be back with Tony. We've been friends for 10 years, and just a pleasure to be here today. So I'm excited about Link and Trio, but I'm going to cover the Link option. So Link is a 40-year fixed rate mortgage with an assumable FHA first and second provided by Trio. We say partner with Essex Mortgage, as Essex Mortgage is the end buyer of these loans, and they are originated. And with this 40-year, we call it a wrapper loan, for lack of a better term, it's wrapped around the FHA financing. And so when the customer is eligible to convert into that FHA mortgage, and second, they can do so with predictable terms. So it's a very flexible product that gives the consumer time to get themselves ready for full-scale home ownership, which is what we want to provide. We want to provide home ownership also as an opportunity, but also to make sure it's sustainable, which is really the most important part of the puzzle here. We go to the next slide, Aaron. Great, thank you. So Link is different than Trio. So this is a lender originated loan for a consumer that will be qualified in the next 2 to 3 years. As mentioned, there's no down payment, which gives you expanded access to credit without increasing the risk. And again, no surprises. And that's really what we want to stress through this process. You know, many of you may run companies or be, in charge of production units for a mortgage company. And there is nothing worse than having to basically lose a day to your phone blowing up on, why X loan all of a sudden fell out and there's 15 transactions behind it that are impacted, and it's really bad. We're going to lose a realtor, lose a builder, lose a referral source, whatever. So we want to take all the pain out of traditional down payment lending with no surprises, no additional red tape that's unnecessary, and really focus on what's required to really get these consumers into a home. So we will guide you through this entire process to make sure it's well understood by both the consumer, the realtor, or whomever is referred in the transaction. Thanks, Aaron. Next slide. Okay, so as mentioned, it's a 40-year loan. It's underwritten by correspondent lenders. There's no down payment required, and a minimum credit score of 580. And there is no income limitation. Most traditional down payment assistance programs have anywhere from 80% of intermediate income. Some go to 120, some go a few higher, but no income limitation really opens a lot of doors, especially in communities that don't have inflated AMI data that have higher income limits than smaller, more rural areas. So this is really helping people in all markets of the eligible geography for Link and Trio. So this is a really big feature that we're very proud of. Next slide, Aaron. Here's a helpful side-by-side. So really how we imagine this is, Link is going to be the product that most people are going to want to qualify for. So we look at this as kind of a waterfall. So to get qualified for Link, we show you really everything you need to qualify. And if for some reason you miss one of those requirements, you can look to your left and see, okay, we've got Trio. So we want to provide options for the consumer. So if you can't fit into the more traditional Link program, then we've got Trio as an option as well. So the main thing is we want to provide options to as many consumers as possible. And that's really important to us, because there's nothing worse than wanting to help somebody who really is deserving of having a home, but you just can't find that option that's going to work. So the other piece that's really, really powerful about these products are the temporary financing that goes with both these options are very market based. So we are very proud of what we can offer the consumer and really keep them in a very affordable payment while they get themselves ready for long-term home ownership. Thank you, Aaron. And just more features. So really what this does, this gives you a high level outline of what to look for when indicating what kind of or which option a consumer may qualify for. So this is very easy to follow, and it really helps people, take out the guesswork as they're looking at which option to take advantage of.
Hey, John, I threw this slide in today just to kind of talk about that waterfall that you're just talking about.
Perfect. So, and thank you for that, Aaron. So really, how we see this is you want to get a mortgage, okay? Well, they will qualify perhaps for something. Usually, the first loan that somebody will look for is a state bond loan. Aaron mentioned Texas. I happen to be domiciled in Texas myself. So, in Texas, there's TSHAC. And so let's see if we can get them qualified for TSHAC. Well, they don't qualify for TSHAC. Okay, well, maybe they qualify for Link. Well, Link won't work. Now we have Trio. And so you have a home. It is a lease with a purchase or ownership option, but you've given somebody, the ability to be into a home. And obviously, everybody has watched the market here in the last year or two. It's hot. I sit actually in Dallas, Fort Worth, where it's the hottest market we've ever seen in the history of Dallas, Fort Worth, where prices are going up and up and up and up. So to use Aaron's example, that $303,000 house being worth $330,000 in a couple years is a very plausible scenario. And so they're basically locking in that value, taking advantage of that equity, and they are basically freezing inflation. So this is a perfect inflation hedge. While there is a temporary, wrapper loan around the long-term financing, it is fixed. The loan that's being assumed is fixed at an FHA market rate. And so again, everybody's talking about inflation. It's a hedge against inflation. So if you want to give a consumer who can't own a home predictability in what their housing costs are going to be for the foreseeable future, this is it. And that's something that you can't do with a traditional lease or rent, because if you are leasing or renting a home, invariably the landlord is going to increase the rents as the values go up, because their taxes will go up, their insurance will go up. And just as inflation hits our economy, it's going to be reasonable to increase those payments. And so this really puts the consumer in a much better long-term situation, and may prevent them from being locked out of housing forever by taking advantage of this now. So we couldn't be more excited or passionate about these products. Thanks, Aaron.
Sure. This is our last slide right here, and this is just to kind of quickly kind of go over where this is available. All the green states right now, that is where we are available currently. And the blue states, that's where we will be available. And we're hoping, hopefully sometime in this quarter, Q3, but we're told definitely going to be in 2021. So as you can see, everything on the West Coast will be available. Washington, Oregon will become available. But obviously, I know a lot of you are probably in the Southeast section there. You know, everything from Virginia down to Florida is going to be available. It's going to be very, really exciting, offering a lot of opportunities for customers in those areas. So again, the green sections are the ones that are available currently. The blue sections will be available here really, really soon. John, I'll hand it on over to you on this part.
Great. So thank you for that, Aaron. So again, could be more excited about this. Obviously, we are partnered with Trio. So to get these end finance loans that we've been talking about, the correspondent client must be set up with Essex. My contact information is conveniently located here on this slide. I know Tony has it as well. And this will be, I'm sure, left behind, or there'll be records of this that people can contact us as a takeaway item. So we'd be happy to talk to you about getting approved with Essex. Really, all we require is that the client is a direct endorsement FHA lender in good standing. Sorry, these are best efforts transactions, so you don't have to be involved with a mandatory or bulk execution shop to participate. So we try to make this as easy as possible. So I would love to talk to anybody who wanted to get information about signing with Essex and get you closer to originating loans for Trio and Link.
I'm checking to see here if anybody has any questions. Doesn't look like it, but let's give everybody just a second, I guess, to, if you have any sort of questions. I do see a couple of raised hands from Michael and Linda. So wasn't sure if you guys had questions. If so, go ahead and put them in the chat. We want to make sure we answer your questions. And like John said, if there's something that you want to go ahead and participate, you have questions about it, please reach out to him. His contact information is right there on the screen. All right, I'm not seeing anybody, John. So that means we did an awesome job. That's really what it means. So
Okay, good.
yeah. John, thanks so much for doing this today. Really appreciate it. We're so excited for this partnership and to make this happen. Essex has just been fantastic with this. And again, we're just trying to make sure that customers have options for any time you have situations where, maybe they have too much income but a low credit score, or they can't qualify for down payment assistance, or they're small business owners. There's a lot of different sort of scenarios out there where this could obviously solve a lot of problems. So again, if you have any questions, or if you want to go ahead and connect and bring this product to your portfolio, reach out to John. We'll go ahead and make that happen. So really excited to go ahead and start making this live in all those different regions throughout the US. All right, I don't see any sort of questions out there, John. So I guess we'll just go ahead and stop it right now. So I appreciate you joining us today. Thanks you everyone for joining us. John, any last comments or anything like that?
Well, Aaron, thank you and your team as well for involving us in this wonderful offering. And Tony, I couldn't be more thrilled to be with your group today. So look forward to many more of these, and to also seeing you in Atlanta later this year.
That sounds fantastic. Thanks so much, everybody. Have a great day.
Thank you.